Welcome back to the Soth System channel. In this video, we'll answer some of the most frequently asked questions about Bitcoin. If you are new here, make sure you hit that subscribe button so you can be notified every time we upload a new video. So let's get into it. First, what is Bitcoin? Bitcoin is a decentralized digital currency without a central bank or single administrator that can be sent from user to user on the peer-to-peer Bitcoin network without going through a financial institution. It was created in 2009 by an unknown person or a group of people known as Satoshi Nakamoto. Bitcoin is the first of its kind, a revolutionary new way of doing money. Bitcoin transactions are recorded in a public distributed ledger called a blockchain. The network is decentralized, which means there are no central authorities, like banks or governments, that control it. Instead, it is maintained by a large number of computers all around the world. This makes it nearly impossible for anyone to hack or manipulate the system. Because of this, Bitcoin is often referred to as a Wild West with more than 21 million coins mined and in circulation, meaning the total supply is fixed. Now that we know what Bitcoin is, let's move on to the next topic. Why should I consider investing in Bitcoin? People invest in Bitcoin for many reasons. Firstly, high returns. Bitcoin has generated some of the highest investment returns of any asset class over the last decade. According to data compiled by the asset manager CoinShares, Bitcoin delivered an average annual return of 230% over the past decade. This compares to around 12% for the S&P 500 and just under 8% for gold. Secondly, financial autonomy. If you decide to invest in Bitcoin, you will be your own bank. You will have full control over your money. No one can take it from you or deny you access to it, not even a government or a bank. Thirdly, Bitcoin is a digital gold. It is the best performing inflation hedge in history. As more and more people become aware of this, demand for Bitcoin rises and so does its price. Fourthly, Bitcoin ETFs. In the United States, several companies have launched Bitcoin ETFs. These allow investors to gain exposure to Bitcoin without actually owning any. The first ever Bitcoin ETF was launched in Canada in February 2021, and since then, these products have been listed on stock exchanges around the world. Fifthly, institutional adoption. Large corporations and financial institutions such as banks, pension funds, and insurance companies are buying Bitcoin. MicroStrategy made its first Bitcoin purchase in August 2020. Acquiring 21,450 for BTC for approximately $250 million. Also, Massachusetts Mutual Life Insurance, a huge U.S. pension fund with assets under management of $235 billion, investing $100 million into Bitcoin as part of its general investment account. In December 2020, Bitcoin price surged above $30,000 for the first time in early December 2020 after the news broke that Paul Tudor Jones, a billionaire hedge fund manager, had purchased 1% of his overall portfolio in Bitcoin. Fast global transactions. The average bank transfer can take 3 days to complete and often involves hefty fees. In contrast, a Bitcoin transaction takes only 10 minutes and costs very little. Also, it can be divided into millions of tiny fractions, allowing people to send small amounts easily. Lastly, robust underlying tech. The blockchain technology underpinning Bitcoin is incredibly secure. It is virtually impossible to hack or manipulate. This makes it an attractive investment for those looking to protect their money from fraud and cyber attacks. So moving on to our next topic, am I too late to invest now? The answer is absolutely not. However, Bitcoin is currently sideways between 110 and 120,000. By the end of 2030, many experts believe Bitcoin might pass $1 million per coin. We are still very early in Bitcoin's growth story. But if you want to buy Bitcoin now, how do you do it? Well, the good news is you don't need to buy a whole Bitcoin. You can buy a fraction of one. So even if you only have $10 to spare, you can invest in Bitcoin. You can also buy Bitcoin through ETFs. These allow you to gain exposure to the cryptocurrency market without having to buy and store any Bitcoin yourself. There are a few different types of Bitcoin ETFs available, but they all essentially do the same thing. They buy Bitcoin and then create shares that can be traded on the stock market. This gives investors a way to track the price of Bitcoin without having to worry about security or storage. Although there are some risks involved, such as counterparty risk and the risk of fraud, overall, Bitcoin ETFs are a relatively new investment product and are still in their early stages of development. However, as they become more popular, they may become a popular way for investors to gain exposure to the crypto market. So to wrap up this video, here are the key takeaways. Bitcoin is a decentralized digital currency without a central bank or single administrator. It was created in 2009 by an unknown person or a group of people known as Satoshi Nakamoto. Bitcoin is the first of its kind, a revolutionary new way of doing money. While Bitcoin has the potential for long-term growth, it is important to remember that it is a highly volatile investment and that all investments carry risk. Before investing in Bitcoin, it is important to do your own research and assess your own risk tolerance. Thank you for watching this video. We hope that you enjoy it and learn something new. If you did, please hit that like button and make sure you subscribe so you can be notified every time we upload a new video.